welcome to you all. Thank you to more than 100 businesses attending today. One of our series that has been running since Brexit began the process in 2016. UK PLC relies on our businesses navigating international trade successfully. And so here we continue these Brexit themed sessions, and they will continue into the new year. Thanks to Richmond Council too for sponsoring this very important session for businesses. And I now invite Councillor Baker to say a few words of welcome. Thank you, Councillor Baker.
Thanks, Anne. Thank you, Anne, and to Richmond Chamber of Commerce for arranging this on behalf of the Council. And it's pleasing to see so many attendees, and thank you for that. And I'm sure you'll get a lot out of the next hour. Brexit is an incredibly important subject, and whatever your views, whether it's the best thing since sliced bread or a dog's dinner, it's here now, and businesses need to be prepared. And hopefully what we will hear in the next hour will help us along that path. And thank you again. Thanks so much.
And thank you, Councillor Baker, for sponsoring this session. We're very grateful. For those new to us, we invite businesses, global, small, large or startups trading in the borough of Richmond upon Thames to join our independent Richmond Chamber of Commerce and benefit via subsidised events, the business network, sharing, developing, growing your businesses with Richmond Chamber of Commerce professionals such as today, and startup mentoring too, CSR for corporates, free advertising, opportunities for sponsorship and promotion such as our very successful awards, and influencing and lobbying via our links to media, and of course the London Chamber of Commerce, and with their affiliation to the BCC, an incredibly powerful lobby. So join and be part of that influencing and join our voice of business effectively. So moving on now, we move on to Nick Farmer, and he is covering tax and financial considerations arising from leaving the EU. Nick Farmer is international tax partner at Menzies, specialising in providing tax advice to SMEs and mid-corporate businesses and their shareholders. He has extensive experience in both UK and international tax issues and was a prize winner in the Chartered Institute of Taxation's 2007 international tax exams. He also heads up Menzies Brexit team and works closely with clients on Brexit planning. He qualified as a chartered accountant with Price Waterhouse in 1996, and he joined Menzies in 2000 after qualifying as a chartered tax advisor. And don't forget Menzies Brexit Help Centre. I thought it was worth mentioning that. So moving on, I should be interviewing Nick. We've got a number of questions that we've gathered from you. So Nick, what are the main sticking points? And thank you for doing this session, by the way, Nick. So what are the main sticking points in trade negotiations, please?
Okay, good morning, everybody. It's a pleasure to be here, and thank you for that big build-up, Anne. Hopefully I can live up to that. Yes, it's not just me at Menzies at all dealing with Brexit issues. It's a team of us. I head it up. I'm an international tax partner, but my colleagues in the VAT team are pretty much overrun with Brexit questions coming their way at the moment, and our manufacturing team is obviously busy, as is our sort of high-tech team. So there's a lot of activity that we're starting to see here. I think in terms of where we are now with the negotiations, the signs are relatively encouraging, actually. You know, you're hearing that probably about 95% of the deal has been agreed, and they're starting to sort of look at it on a line-by-line basis. I mean, it's sort of classic EU, I guess, in a way, that things are always going to go down to the wire. But it seems that, you know, a deal should get done here. There's some obvious sticking points. There's the emotional one, which is fishing. You know, there's the ones about bringing back control. So there's governance and there's competition rules. But I think there seems to be an energy on both sides. It's obviously such an important business channel for both parties. And probably don't underestimate the fact that there's a new sort of administration in the White House now that will be looking at this very closely and probably expecting that a deal will get done between the parties, because they themselves will be looking at their trade arrangements with the EU and the UK next year. So I think there's, you know, a lot of energy to get this done. Those sticking points, I don't think anyone's saying they can't be resolved. So it'll probably go down to the wire, but yes, I think, you know, there'll be a deal here that will get done, which would be good news.
And how ready are businesses for these wide-ranging changes?
Well, I mean, we're starting to see a lot more activity now, and people are starting to get the sense of urgency. I mean,
Good.
put it into context, this is a massive change which is coming down the line. And, you know, perhaps businesses, you know, understandably had their eye off the ball here, dealing with COVID, which has been, you know, a massive issue for the business. So Brexit hasn't perhaps had the focus which it would otherwise have had. There's been a lot of confusion as well about, you know, past deadlines which have come and gone, and is this one really going to happen? And then some of the rhetoric coming out from the government really hasn't been that clear on what's happening. But this is a massive change. We're leaving the customs union, we're leaving the single market, and businesses are starting to get the message. I think when you look at surveys which have been concluded, there's a feeling that probably somewhere between a quarter and a third of businesses will not be ready for you know, the start of next year, when, you know, this change happens at 11 p.m. on the 31st of December this year. So you know, it's not long to go. There's about 6 weeks. Anybody who's not started their planning has got some catch up really to do now, and we're starting to see this sense of urgency come into business. So, you know, hopefully this sort of forum is getting that message across to all businesses, those that are selling goods, those that are providing services. Everybody has to look at this and see what it means for them.
Yeah. And can you give some examples of what you're seeing in terms of how businesses are preparing?
Yeah, of course.
Thank you.
Yeah, I think one of the things that, you know, we are seeing is people look at their supply chain. Clearly, you know, what goods are they flowing across the border here? Is it the best you know, supply chain that they can have? Are they better off routing goods you know, through an EU port rather than bringing them into the UK to take back out to you know, the mainland Europe? We're seeing a bit of concern with SMEs also about customers and pushback from customers that perhaps they're not going to be willing to deal with custom formalities on the EU side, and therefore UK businesses that are selling, you know, are looking at whether they need to set themselves up in Europe, whether they need to set up an entity or get themselves registered so they can actually be the importer of record and take the pressure off customers who might look for other sources for their goods. We're starting to see a bit of warehousing as well. You know, people actually stockpiling, taking goods either side of the border in advance of the 1st of January. There's a concern that, you know, ports might start to grind to a halt a bit. Things will slow down, and therefore they need to have the goods in the right place. So, you know, people are reorganizing themselves and trying to make sure that, you know, they've got their sort of plans ready for this change, which is, you know, certainly coming.
So the EU is made of 27 member states. Does this impact on how businesses approach the market?
I mean, this is one of the things that, you know, does sort of you know, start to dawn on you that okay, we're negotiating with the EU as one body, but actually it is 27 different countries, all with their own rules and regulations. And so, you know, it's not just a case of doing business with the EU. You've actually got to look at what country you're doing business with. And this is for people dealing with goods and services. Those that are dealing with goods, you know, if they're taking goods into a particular port, what they got to do to get themselves registered there, VAT registration, URI numbers, do they need a fiscal representative? This is different in different countries. Say in the Netherlands, for instance, you know, you can be a non-established business and you can take the goods, you know, clear the goods through customs as a non-established business and get yourself a VAT registration. But in Germany, for instance, you wouldn't be able to do the same thing. You can store the goods in a Dutch warehouse, but not in a German warehouse without having that kind of local entity. So very much needing to look at this on a country by country basis. And it's the same for services as well. So services, you know, people selling their services to a customer in a particular country will need to look at the rules of that country and whether, you know, they've got the right qualifications to provide that service, or whether there's any economic need for their service in that particular country for a sort of a non-established business. So, and there's I guess the thing here is there's a lot of guidance. So you can go to, you know, the government portal, and you can see on a country by country basis across the EU actually what you need to be able to do to sell your services into that country. So, you know, people just need to be aware that this is actually 27 countries. Where are they selling their goods or their services to, and check it out at that level, not just at this high level EU sort of approach.
And what do businesses selling services, what do service providers need to do to prepare?
Well, that's a big one. Firstly, they need to make sure that they can actually sell their service into that particular country and customers. There's going to be different issues for them, perhaps. You know, we're hoping there's a deal that's done here around data. A lot of service providers are obviously exchanging data across border here. We're looking for sort of a data adequacy agreement with the EU that, you know, UK data will be able to flow into the EU, but it's whether it will be able to flow back from the EU, whether they'll see the UK as sort of being adequate in sort of data protection rules. So that would be, you know, a clear benefit of getting a deal for the service sector. Service sector will obviously probably be impacted more by mobility and needing to have people actually travel in and out of the EU. I know that's difficult at the moment, but it's obviously going to come back at some particular point in time. And then you need to look at whether you need visas. You know, do you need any licenses to actually operate in country? So service sector, as well as, you know, those providing goods, have actually got to you know, realise that there's different arrangements in place now. And services, unfortunately, will not typically be part of a free trade agreement. When you look at free trade agreements, they're always very light on services. If you look at financial services, they pretty much knew from the word go that they weren't going to get passporting rights to sell their financial services to EU customers. And they started to establish themselves in the EU. So we're working with, you know, various businesses in that sector who are actually setting themselves up on the mainland so that they can actually provide their services to EU customers. So yeah, big impact for service sector as well.
And what tax and financial changes do businesses need to be aware of, Nick?
So we've touched on some. I mean, the big ones for goods are obviously dealing with VAT and custom duties. There are, you know, there's a border operating model, which I would very much recommend anybody who is flowing goods across border takes a look at. It's 138 pages, so it's quite a heavy read, but it's a clear read. You know, when we've spoken to customs agents, they've always pointed people in the direction of this to familiarise themselves with the rules. I think the UK government realised this is going to be a big impact, so, you know, customs formalities are going to be phased in, from the 1st of January, staggered 1st of January, 1st of April, 1st of July. Anybody that's bringing in non-controlled goods, they'll be able to do the custom formalities within a sort of 6-month windows of the 1st of January. They won't need to be done at the sort of point of entry of the goods. And it's the same for VAT, actually. We're now going to have sort of accounting through the VAT return rather than dealing with import VAT at the time of importing the goods. So the actual accounting will come through the VAT return in the period in which those goods are brought into the UK. And that's similar perhaps to the way that the Netherlands operates at the moment, with that deferred sort of cash flow advantage that you can get from not having to pay your import VAT at the time you bring in the goods. That's the kind of indirect tax. There are direct tax implications. If you've got anybody on the webinar here that's got group companies, for instance, group companies that are flowing payments across border, dividends, interest, royalties. We see a lot of those payments going between UK companies and their European subsidiaries. From the end of this year, the directives that are in place across the EU to protect against additional taxes will fall away, and everything will go on to a tax treaty basis. UK does have tax treaties with every single one of the 27 member states, which is great, but sometimes those treaties do not eliminate all the taxes. So just as an example, if you were paying up a dividend from Germany to the UK, if you did it now, you'd incur no tax. If you do it after the end of the year, you'll incur a 5% tax charge. So things are going to impact businesses in that way. There's some other small ones just to mention. I think national insurance sits there. It's not concluded on. We would hope it's part of the deal. People can move freely at the moment, and they can get their kind of A1 certificate of coverage just to pay their national insurance back in their home country. We hope that will be something that will be there and replicated, but it might not be, in which case, there may be additional national insurance burden for people who are actually carrying on business within the EU. There's quite a lot to play for in terms of tax. There's quite a lot of issues there, and direct as well as indirect taxes are all part of this change process.
And trade agreements with other countries. What's the progress?
Yes, I mean, actually not bad progress actually, which is encouraging. Just to put it into context, at the moment, the UK benefits from all of the EU trade agreements, which is about 38 different countries or trade bodies are covered by those agreements. And as soon as we leave the EU, that all falls away, which means that the UK obviously has to go out and try and negotiate its own trade agreements with those existing partners. The big ones, to some extent, have been done. So Canada was concluded very recently over the weekend, I think. Japan a few weeks ago. Switzerland actually is a very big trading partner, certainly in our top 10 of export partners, and that has been agreed. There's, I think, about 14 continuity agreements still to go. Some quite big countries in there: Mexico, Singapore, Egypt, Vietnam. So they've still got to agree these. So anybody that is trading with customers outside the EU really needs to look at those trade agreements and see what the UK has got in place. Have they been able to negotiate a continuity agreement? For instance, the one with Canada is actually pretty much a replication of what we've got with the EU, so it should be a seamless rollover. The one with Japan is slightly different. They didn't roll over, they had new terms in there. So anybody trading outside the EU, well advised to look at the list of what trade agreements haven't been negotiated, and to make sure they're not going to be, or to identify whether they're going to be impacted from the 1st of January.
We've had one question, Nick, before I move on to our next question. Can we have the name of the 138-page document, re-VAT duties, please?
Okay, it's the business operating model. if you Google business operating model, it will come straight up. It's government documentation. I think it's an absolute must read for anybody dealing in goods and exporting or importing them.
Thank you very much. So where should businesses start with their preparations in your view?
I mean, that's a good starting point, isn't it? The business operating model, that's a key government documentation now. There's some other good information out there. So the government have put together a transition checklist. Once you put in your particular circumstances, ask you some questions about your business or your sort of particular individual circumstances, it will then highlight a list of changes that you need to be aware of, and it will take you through to different sections of the website that will address those particular points. I think if you're dealing in services, you should probably look to contact your trade body. So for instance, say somebody is an architect, there's going to be new rules about providing those sort of services into the EU, and that particular trade body will have looked at it specifically and perhaps represented to the government on behalf of their members. So look at your trade body. I sort of hesitate to say it, but I think the Menzies website, we have our own Brexit hub, and we've worked quite hard actually to bring a lot of content onto that. So you can go onto that, you can provide links to all the trade agreements that I was talking about, to the business operating model. We've got our own transition tool on there. We've got links to our international partners. So we're part of an international network. So all the advice we source from Ireland or the Netherlands, come through that international network. So certainly Menzies Brexit Hub is also a good source of information.
And is the UK tax regime likely to change after the end of the transition period? And what do we know about the proposed free ports?
Yeah, I think, if you'd asked me that question and before COVID, the UK was possibly positioning itself as going to be a low tax jurisdiction, sort of hanging off the side of mainland Europe. I don't think that will be the case anymore. I mean, our corporation tax rate was trailed to go down to 17%. It never did. It stayed at 19%. The government are already talking about the need for tax rises to sort of pay for the debt burden that is building up here. They've sort of trailed the fact that capital gains tax may have to increase. They've done consultations on other taxes. So I would have thought that the sort of main corporation tax rate will stay pretty similar. Once we leave the EU, certainly there's a freer hand for the government to design its tax system to incentivize different parts of business, maybe through enhancing the existing R&D regime that's there for companies. And I guess free ports are one of the sort of ways in which the government are looking to take back control. And they've put out a document to say that they're looking to have, by the end of 2021, a number of free ports in place around the country. And it's worth actually recognizing we already have some of these in the UK. So not necessarily free ports, but we have enterprise zones. We've got the Manchester Enterprise Zone. We've got one in Tees Valley for advanced manufacturing. There's quite a few around the UK, and actually Europe itself has free ports. If you look at Bremen in Germany or Barcelona in Spain, Venice in Italy, all these places actually that they do have tax advantages associated with them. And that's really what the UK is looking to do with these free ports. They're looking to potentially drive economic activity. The goods wouldn't necessarily have to clear customs to come into the country. So actually, they can actually be worked on and then sort of re-exported from those locations. So free ports is definitely something the government is keen to introduce. We see them already around the world. So that sort of change, I think, is being trailed. And again, it's part of this sort of take back control that the government is looking to demonstrate.
Thank you so much. That's been fascinating, and we look forward to inviting you back as we progress through this journey.
Okay, no, you're welcome.
But thank you very much indeed for giving of your time, as indeed Councillor Baker has done. So thank you, Nick, and we'll be visiting your Brexit hub.
Okay, yeah, lovely.
Thank you very much indeed.
Thank
so
you.
Now we move on to our next panellist, Greg Vincent. I'll do a brief introduction so you know about Greg. He's from Morrison Solicitors, partner and head of department, corporate and commercial. He will be addressing the legal changes that will affect businesses arising from the UK leaving the EU. Greg is an experienced corporate lawyer with a background in advising clients on buying and selling businesses, business startups, fundraising, and other general corporate advisory work. With a specific interest and expertise in domestic cross-border M&A, Greg advises businesses in relation to the corporate aspects of raising finance. He also has a particular experience in establishing EMI share schemes for employers. Greg also edits the firm's Morrison Solicitors Corporate Insights briefing paper, keeping clients and contacts up to date on the latest news from the specialists in our business, in Morrison's business practice team. So we move on now to Greg. Hello, Greg. So if we, Mark. Hello, Greg. Excellent. So thank you for joining us this morning. Fantastic. Greg.
An opportunity to talk about something other than COVID this morning. Brexit is almost like relief.
Yeah, do you reckon? How palatable. Anyway, over the years, all businesses have had to grapple with often complex EU regulation, whether it be the dreaded GDPR or ensuring that goods meet EU standards. Often they will have significant time and energy in building a compliant business. What is going to happen, Greg, to all of these rules post-December 2020? That's what people want to know, just as they have heard from Nick about the financial implications. So over to you.
So as Nick said, on the 31st of December, 11 p.m, 47 years of mechanisms for importing EU law into our domestic legislation comes to an end. And the brief answer to your question is, in relation to those rules and regulations that people have spent a lot of time complying with, there's not going to be an immediate change. And without giving everyone a law lecture this morning, which is not what they probably want, in brief, the way the EU law works in this country is you essentially have three species of EU law. There is that which comes from the European Union that we have put into our own domestic legislation. There's that which has direct effect, a lot of regulation around environmental issues have direct effect. And then there's the rights and obligations that arise because of the treaties. Something would be like equal pay. That's the sort of thing that arises out of the treaties. And all of these are essentially going to be dealt with under the withdrawal agreement by two key provisions. The first one is to say that that body of law will be retained law. So it will be, to the extent that it's EU direct legislation, it will just be incorporated into our own legal system. And then there's a correcting power, which will sort of put in the bits of the puzzle where there's missing bits, because taking a whole body of law that's come from the European Union, our domestic law that's not come from the European Union, and law that we've interpreted in amongst our own domestic legislation, means that we have some filling in to do. And there's hundreds of statutory instruments that have already been prepared to do that filling in. So those three areas of law will be combined into our domestic retained EU law, and all the sort of bits in the middle coloured in to make sure that it works as one body of law, sort of. And then we have to think about how it's interpreted, because whether it's bendy bananas or whatever it is, we've lived with the ECJ's jurisdiction for a long time. So what happens to all of that? Because that's essentially the EU's version of the common law as opposed to legislation. It's the way it's interpreted. And the first thing to go really is the concept of supremacy in relation to EU law. Whilst, of course, we are going to be, as I say, having retained EU law within our jurisdiction, it will no longer be supreme, the European law. So as we deviate away from it, domestic law will take precedence. And that EU law will essentially be determined and looked at by the courts through the prism of EU decisions, to the extent that it's not changed because it's retained within our legal system and stays as it is. But the Supreme Court will not be bound by that, and they can depart from ECJ decisions. So that's sort of in a nutshell what's going to happen to all those regulations. The nub of that is they will be retained as they are. Moving on from the 31st of January this year, there can be amendments outside what was previously there, and they may be looked at through the prism of the ECJ case law, but we don't have to deal with EU supremacy or a binding effect of ECJ decisions.
Many businesses are currently just trying to survive the COVID crisis. Some of them, such as small service businesses, won't import any goods directly from the EU or have any clients in the EU. How relevant is Brexit to them?
Well, I was reading the other day that the Institute of Directors have recently done a study on businesses and their reaction to Brexit with regard specifically to the actions that they've taken. And the statistics, and I'm not going to blind everyone with statistics, but this is the only one I promise, was that 28% of businesses didn't think that Brexit would have any effect on their company whatsoever. And it is fair to say that the most affected businesses will be those who buy or sell quantities of goods or services from the EU. But, and it's also fair to say that, the overwhelming majority, over 90%, possibly 99% of businesses won't be exporting to the UK. But there are things that SMEs should be thinking about. Micro businesses should be thinking about, the backbone of our British economy, the smaller businesses need to be addressing. And it's also important to remember that as small businesses, they don't have the funding that the larger businesses have to get right ahead of this and to, get all over it. So even though there might be less relevant or less dramatic or glamorous changes to their business, they are going to be the sort of things that, relatively are expensive to deal with because they need to take advice on them. So things such as, things such as the healthcare sector, they will deal with lots of staff potentially from the European Union, lots of valued and valuable members of their staff, and they need to be thinking about their settled status to ensure that they have the right to continue to live and work in the UK. Yeah. We mentioned briefly earlier passporting, so small financial advisors need to be thinking about the regulations that apply to their sector. There is an equivalence regime, but it's a unilateral regime from the EU. It's affected by political issues, and it can't be reviewed by the court, the decision that's made by it. Richmond Chamber, trade associations, chambers, very important. Small businesses have a much softer voice than the larger businesses, and relying on your regulator, your association, or your chamber to lobby on your behalf to increase the volume of those individual voices is important, particularly where they're very fragmented sectors. There are a lot of small travel companies and, as I say, financial advisors or insurance brokers. So that's important. I've been working with some travel businesses recently, and they've been, leveraging ABTA to make sure that some of the burdensome visa regimes are not so burdensome, to access flexible employment arrangements, so that, for instance, they can have staff working in Europe for short periods, and just maintaining consumer rights in the domestic legislation going forward, because this is something that's intrinsic to building consumer confidence. And whilst there is a fine line between it sort of hamstringing the way business does, operates, it also, as I say, it's important for consumer confidence. And coming out of the EU can, impact that if people think that they're going to get a raw deal outside the EU.
Yep.
So those are all important things that small businesses should be thinking about, even if they're not exporting to the UK, to the EU. The other thing is data. Data, we're not going to, GDPR, again, it's far too early in the morning to be talking about GDPR. But we haven't had an adequacy decision relating to cross-border data transfers. To be honest with you, if you're a UK business and you're already complying with the GDPR, which is a regulation, so it has direct effect already in the UK domestic legislation, and you've got no contacts or customers in the EEA, there's really nothing to be done. But if you're a UK business that does receive personal data from the EEA, you need to take extra steps to ensure that you can continue to allow that flow of data back and forth. From our side of life, we've said that sending data to the EEA won't require any additional steps. The other way around, the way to resolve this is to include some certain standard contractual clauses in your agreements, SCCs, and they will ensure that going forward, you're compliant with the regime that the EU implements. So there are things that business should be doing, particularly if they are sharing data with the EEA on data protection. But otherwise, GDPR already has direct effect, and if you're not doing that, there's not really much to do.
There's so much information out there, Greg, regarding the ifs, buts, maybes of the impact of Brexit. It's hard to identify what to focus on. What are the top 10 things that most UK SMEs should be doing right now to brace themselves for business post-Brexit? And with 2021 fast approaching, are they too late to do anything now?
Well, it's never too late. A lot of us, say businesses thought Brexit doesn't apply to them, or they haven't, as Nick said, they haven't done a lot of preparation yet, but it is never too late. A couple of things, I agree with Nick in relation to reviewing your supply chains. Speak to your suppliers and provide some services to your business about what their plans are. It's all very well doing with your plans, but if you have a bottleneck because they haven't planned properly, that's not ideal. If you're receiving goods from a supplier who is relying on EU imports, you might want to see what they're doing in the transitional period when there might be some issues logistically in getting the goods into the country with their stockpiling to make sure they can meet your order requirements to service your clients. Speak to your suppliers to make sure that they're not putting up their costs, because all of this friction is additional cost, and you don't want to end up having not planned for additional cash flow to meet that cost. This applies to small businesses as well. You may not be, as I say, you may not be importing direct from the European Union, but somewhere along your supply chain, they may well be. So that indirect import is relevant. And if you speak to a supplier and they seem terribly ill-prepared, then maybe it's time to switch suppliers. But at least you're given the option ahead of time, rather than finding that your business grinds to a halt because of those logistics issues. Then there's obviously checking existing contracts, those which are extending beyond the end of the year. You may want to double check what references there are in those contracts to the EU. There could be, for instance, references to exclusivity. It's all very well saying you've got exclusivity in the European Union, and then finding yourself when the UK is outside the European Union that you've lost exclusivity. There's also, there might be clauses in there that rely on the assumption that the EU law will apply after the end of this year because they were drafted years ago. That's something you need to consider. There may be clauses that are activated due to Brexit, such as price changes. And that may not specifically talk about Brexit. It may talk about some sort of aspect that's outside the control of the supplier. This, of course, is one. And that kind of clause may give them reason or legal justification to up their prices or possibly to terminate And on the other side of things, you know, when we're talking about, for instance, changing your supplier, if you're locked into a long-term supply agreement, for instance, you may find that a force majeure clause helps you relieve yourself of that agreement, because Brexit being a substantial change that's outside the control of the parties. But it's not just existing contracts. I think the next one, number 3, would be new contracts, because, of course, you know, people are negotiating contracts all the time, and with the 31st of December fast approaching. And I hear what Nick says about a deal, but it's not all signed and sealed yet. And, you know, you might want to take advice as to what you might want to put in your agreement in the event of a no Brexit deal. You're also going to have to think about how you deal with taking advice from local jurisdictions. I mean, up to now, you know, the EU law, it's a homogenized system, essentially. You know, people don't take local law advice in the same way they do with third-party countries, or in the way they used to do when doing business with the EU. But local advice may be important now as we start to depart from the way in which we have a centralised set of rules. And in those circumstances, you may want provisions in your contract that deal with that. The sort of things that, for example, they might be, you want minimum standards, and you want them embedded into your contract. And that is because that is the way in which you can protect your customers, and the way that you can instill consumer faith in your products or your services, and you're going to just memorialise it in the contract rather than rely on EU law, which no longer has the same expansive impact across the UK. Staffing, we briefly talked about staffing when we were talking about SMEs and small businesses. And very briefly, anybody who is a citizen of an EU country that is now living and working in the UK needs to apply for settled status, or if they've been here for less than 5 years, pre-settled status. This is all stuff that I think a lot of people already know about. You just want to check that your staff have done that. That's obviously important, particularly if you rely on European staff a lot. But also those British nationals working overseas, you need to check the country they're in, and make sure that you've done what you need to do with them. And ensure that any affected staff supply is dealt with if you need alternative staff because of issues with people moving back to continental Europe, or people with issues with their settled status. And also your contracts may provide for a particular nominated staff member, which gives the client a veto if they can't have access to that person. So you may find yourself in a situation where you can't easily replace that skill set if that person's leaving. So to get on top of that is obviously quite important. The fifth one's quite quick, which is intellectual property. UK Intellectual Property Office. I mean, unregistered IP is broadly unchanged. Registered IP, which are trademarks, patents. The announcement from the UK Intellectual Property Office is that trademark registrations and EU designations will continue to have protection in the UK. Basically, a comparable UK trademark registration will automatically be created in relation to an EU registered trademark. And patents will broadly remain unchanged simply because the European Patent Office isn't an EU structure. So that's unaffected. So to just, to be clear, if you've got a registered EU trademark, it is going to be incorporated as a UK registered trademark. Number 6, finance. Obviously, it's not cheap to take advice or to stockpile goods. All this friction costs businesses, especially small businesses, money, tariffs, potentially, etc. So speaking to your bank about finance options for temporarily increasing cash flow might be something you want to do sooner rather than later because they take time. So if you've not done that already, you might think about doing that. Please bear in mind that with COVID and Brexit, there's a whole sort of bunch of uncertainty. So you may be required to give a legal charge on a house and a personal guarantee and all that kind of good stuff to leverage the bank's risk. But if you do need funding, now really is the time to be asking for it. Sooner rather than later. The next one, number 7, regulatory changes and data. We talked a little bit about data before, but regulations cover every sector. They cover every industry. Financial services to organic foods have got regulations and directives from the EU. So you might want to, as I say, double check the status of that. Speak to your trade body, speak to your chamber, see what they're doing in relation to lobbying government, in relation to changes, and making sure that consumer protection is still there. And keep up to date with the government websites and the ICO in relation to data. the UK IPO in relation to intellectual property. They're good resources for announcements. New markets, number 8. European Union isn't the only market out there. If you're going to be negatively affected by Brexit, if you're concerned about that, the Department of International Trade has for a long time, or for a substantial amount of time now, been actively encouraging small businesses to look for new international markets. So have a think about that when you're producing your next business plan, or when you're strategizing at your next business meeting about new markets, because we've been very European focused, but as to say, there is help out there, and there is encouragement for small businesses and grants in relation to international development of your market. There is, as I say, alongside that, number 9, support for financial businesses, financial support for businesses. Some of this, particularly in relation to customs declarations, there are grants up there for recruitment and IT in relation to completing the customs declarations, training, co-funded training in relation to projects to help your business complete customs declarations. So there are some grants out there. So it's important to, the best way to start is to look at the government website. There's a good section on grants that are available for small businesses. And then taxes and tariffs. I'm not going to go into this in great detail because we've got somebody talking about export contracts. But of course, that's an important aspect, particularly if we are in a no-deal situation. So those are my top 10 tips, Anne.
Well done. I mean, there's one question that's come up. What is the deadline for EU nationals to apply for settled status for employment purposes? Yeah, I mean, that may have come a bit left field for you.
Yeah, I don't know the answer to that question, but whoever asked it, I'll get back to them.
Yeah.
Employment law is not my forte, but I will send you an email, Anne, so you can ping that on.
It's a pleasure. Yeah. Thank you so much. That was fascinating for the incisive considerations. Thank you very much. And again, we will be inviting you back if you'll be able to come and join us again. That would be fantastic, just to guide us down this route.
Thanks, Anne.
No, thank you. And now to our next panellist, Peter Bishop, Deputy Chief Executive, London Chamber of Commerce and Industry. He's the world expert, effectively, on export documentation, responsible for international trade documentation activities, leads on stakeholder engagement. He's the editor of the London Business Matters and a member of the LCCI board. He chairs the ICC World Chambers Federation International Certificates of Origin Council, which oversees the issue of 15 million origin documents worldwide annually. Previously, he chaired the ICC WCF World ATA Carnet Council to manage and develop the temporary import and export regime for professional equipment, samples and goods for trade fairs worldwide. He's a member of the Executive Committee and Council for ICC WCF. He holds an MSc in International Business, a writer and consultant on the mechanics of international trade, and his books include the International Trade Manual, a must read, I imagine, Import, Export, Freight Forwarding, which was a co-author, and the Export Handbook. So an impressive gentleman. So thank you for participating, Peter. And over to you. Are you going to guide us, just so that the delegates are aware, you're going to guide us through a presentation?
Yeah,
so
I've got a few PowerPoints, which I think Mark is going to put up.
He is.
Thank you for that overlong entree.
You deserve it, Peter.
But probably the most relevant thing, actually, for the duration of a year and a half, I was seconded to the Department for Exiting the European Union, which is gone now, up until March 2019, on Origin, actually, on Origin rules. It's a very key part of how we will trade, hopefully with the European Union on the UK-EU trade deal, but also with the various trade arrangements that have been mentioned so far, and hopefully many more to come with places like the USA, which is a big one. Now I'm going to go through at pretty breakneck speed, because hopefully there'll be some questions. And this is such a massive subject, you can't cover everything. What you can do is, like, you know, give some guidance. And as my co-panelists have said, there's a lot of information out there. There really is. Maybe there's too much, actually, but it's only important for you if you interpret it in a way that is for your firm, your operation. And that's something, you know, you have to do for yourself, or indeed, you know, employ people to sort of consult for you. Anyway, I'm going to go on to the next slide now and say, okay, well, I'm going to have a quick look at where we are now, but then I'm going to focus in on certificates of origin, particularly customs declarations, which have come up, and I'll say a bit more about, and ATA carnets too. I will have some of my own information sources, but as I mentioned, there's plenty more out there, and hopefully there'll be time for Q&A. So where are we now? Please, next slide, Mark. We haven't mentioned the the UK global tariff yet, but in May, the government published our first independent, if you like, global tariff since we joined the European Union back in 1973. And understandably, in that time, we used the EU tariff. We did actually at the beginning, from 73, there was a 7-year sliding scale up to 1980, where our tariffs went down and down and down with the other EU member states. That isn't going to happen this time. We go and it's either the tariff comes in, our tariffs come in for all EU goods, or there is a UK EU trade deal. Now that first tariff, the one with the 7-year sliding scale, that was the precursor, and it was the natural, something that had to happen really before what was the so-called completion of the internal market. That was the from 1985 to 1992, the beginnings of the single market that we are leaving next year. And I'm not saying that to be gloomy, but that was the thing that that really brought the 4 freedoms that everybody became very familiar with over the last few years into much more keener focus. So when the Treaty of Rome started the European Economic Community back in the 50s, the 4 pillars were the freedom of movement of goods, freedom of movement of people, freedom of movement of services, and underpinning everything, freedom of movement of capital. It hadn't really become a reality. So when Mrs. Thatcher, way back in the 70s and 80s, was Prime Minister, when it was our turn to appoint the Commissioner for the Internal Market, she sent over Lord Cockfield to give them, quote, a kick up the backside to get those 4 freedoms to become real. So the single market did have a lot of British impetus behind it. Anyway, back to the UK global tariff. It's actually rather good. It reduces the average tariff rate for goods coming into the UK, not talking about trade deals here, but from 7 to 6%. It's got rid of the so-called nuisance tariffs, so anything under a 2% tariff has gone, it's now 0, and it has simplified and harmonized the way the tariff works. So when there were mixtures of, if goods are coming in, they pay this amount as a percentage and this amount as ad valorem and something else too. That's all been slimmed down. It is also a mine, first time we're going to say this, but first time it's a mine of information on goods coming in. It's you know, VAT, it's licensing, it's all the HS codes are going to be there, or are there, which is the harmonized system commodity codes, also known as tariff numbers. Everything's got a tariff number from 0101, which is a day-old chick, right through to 9706, which is an antique of 100 years or more. So you can see the kind of logic there. First 24 chapters are all organic products. After that, they are manufactured or processed ones. So that is a mine. It's free. You can get it online. Just go to gov.uk trade-tariff, and you get, that's your first mine, as it were. Now, to complement that, in May, and this is something Nick mentioned earlier, was the border, was it called the border operating model. That's the one that's 166 pages. Nick, I advise you also to get something which came out in October, which is called The Border with the EU, Importing and Exporting Goods. That's 270 pages, and that's got procedures of every kind, and includes VAT, animal products, plant products, licensable goods. And it's got a really useful navigation guide which has columns of what's new and what's going to change. Just go on to, so it's called Importing and Exporting Goods, the Border with the UK. Again, it's free. You can download it. Okay, negotiation of the EU-UK trade agreement. Won't say much about that. I noted that Nick was cautiously optimistic, and Greg said, well, the deal's not signed and sealed yet. But whether there is even if there is a deal, okay, this is a hard Brexit. Ever since we decided that we weren't going to be in the customs union and the single market, it's not soft. It is. I mean, one way of putting it, I thought was good, was the UK government is not seeking an agreement that involves close alignment, and that's true. Now, if there is a deal, however, although it may not have all the 30 chapters that something like the EU-Canada deal has, that came up earlier, but it will address duties, and origin rules allowing should mean a significant amount of tariff-free exchange of goods between the UK and us. Now that is important. I know I've said it's gone from 6 to 7%, but there are significant tariffs around. You've heard about car parts generally, and anything to do with cars is 10. Foodstuffs can go up to 35%. This cotton shirt would be 12% if it was imported from the EU. Just a final word really on the deal. The FT today, Financial Times today, said negotiators are exploring the idea of review clauses to resolve the impasse in EU-UK trade talks, with the possibility that parts of the deal could be revisited several years after they take effect. So, and the date I think that came out was 2030. So let's do something now. It doesn't have to be perfect, because in 10 years' time we're going to have another look. I'm not sure what the response from Lord Frost was on that. Right, so I'm going to go on to origin now. So certificates of origin, still about the two main types. The standard document. It's actually an EU format one, although it comes out of the revised Kyoto Convention on the simplification and harmonization of customs procedures. All those forms there are as per Annex K of that. What happens in 2021? Well, that the EU certificate of origin becomes a United Kingdom one, right? So pretty straightforward. We would term it as a non-preferential CO, because it doesn't actually bestow a tariff preference on goods which are attached to it going into another market, but it is regularly called for as a payment part of the payment mechanism, like a documentary letter of credit, where they call for a clean on board bill of lading, packing list, invoice, and yes, a certificate of origin too. It's often used in trade defense mechanisms to ascertain the origin of goods, and often too where goods are being imported and the buyer expects to or may re-export them after a period of time. The next document you see there is the version used for exports to the Arab League. That will not change at all. That stays exactly as it is. Now that third one, I could spend quite a lot of time on that, but I better not. The trade agreements that Nick mentioned are linked to this. So for example, if now I'm exporting from the UK to Mexico, right? And because there is an EU-Mexico trade deal. Mexico is one of those, he said 40 odd, or I think he said 38, maybe 40 odd trade deals that the EU have, and that's with 70 markets, because some cases there were trade blocks too. That form, that document will be the one that we would use now. The origin rules that apply to that trade deal are very different from the origin rules that apply with regard to the non-preferential CO. They're also different, by the way, from the trade agreements we have with many other EU states. The picture at the moment is, although we've got a UK EUR1 now, other than the transitional rollover trade deals, which are dependent on the overseas market saying, yes, we will accept this, and it can include EU origin. I'm going down a route here where I might have to explain cumulation in origin, but I fear with the time as it is, that should be for another time. I want to end on this bit of it by saying the picture is actually very unclear about whether rollovers are and other trade deals that have been done with regard to origin are dependent on there being a successful outcome of the EU-UK trade deal. So I'll move on to the next slide now, and that is okay. Because we've been in the single market and the customs union since 1973, when we've moved goods to and from the European Union, there has been no need for a customs declaration because it hasn't been described as an export or indeed as an import. It's a single market, it's an internal market, and you don't need that. Therefore, on the 1st of January next year, in principle, the number of customs declarations that will be needed for goods going out and for goods coming in from the if you add on the European Union too globally, are going to go up from 55 million estimates say to 280 million, maybe even 300 million every year, right? That is a massive burden and a massive change. It was estimated by Michael Gove, I think, back in the summer that there were about 4,800 customs brokers in the UK at the moment. And in order to service this requirement on behalf of business, that would have to go up to 48,000, so another 30,000. Now, we, London Chamber, have, along with other chambers in the UK, set up a chamber customs service. So if you want us to do and remember, we're a company limited by guarantee, so we're not a, we don't pay dividends or a shareholders. So we have set up a service to try and help businesses meet that demand. It's on the London Chamber website, and we've got a form there, customs declarations, registration request, which will ask a bit about what you think your need might be in and out. One of the speakers mentioned that there was a pause on imports coming in on the customs deck side until the 1st of July. You can still do the customs decks, but you can defer duty and VAT until July. Finally, I'll just say something about, so next slide, please. ATA carnets. ATA carnets are documents formed by a convention started in the 1950s of goods going temporarily from one market to another because of trade fairs, exhibitions, samples, professional kits. So if you go next year, right, when you go to Europe, if you're going to hopefully there'll be the Frankfurt Book Fair again, and the Monte Carlo Rally, or the Grand Prix in Monaco or Monza, and when kit goes out, like F1 cars goes out temporarily for things like that, as well as for the trade fairs. If you take out a carnet, you don't have to pay any import duty, you don't have to pay any VAT. The carnet sorts it all out for you because you leave a guarantee with the Chamber of Commerce who issues it. So that is going to change. There are some particular issues, next slide, on Joni's pre and post December and Northern Ireland, because Northern Ireland, remember, if that border does come down in the Irish Sea, and goods go to Northern Ireland temporarily, then they are then in the single market. So there are lots of discussions going on about that, but I won't go into them at this stage. But we'll stop there, Anne. I think my next slide is all about well, just some information stories. There's many more. I actually went on this middle one there, the UK trade agreements with non-EU countries yesterday, because I was looking up something about Egypt, and it said page down. And that's to me is slightly symbolic. With the traders, we don't know. There's a lot of people who are shipping goods next year in January, and we don't know what the whether we're entitled to any preference, whether the rollover covers accumulated origin from the EU into the UK. So, and it's 26 working days left. So, you know, there is definitely work to be done. I agree with Greg and Nick, or Greg, I think it was, that said it's never too late, but boy, this is cutting it fine. Anyway, back to you, Anne.
Okay, well, we've had, thank you very much indeed. Just a quick, so I don't forget, Steve Diamond has kindly clarified that the deadline for applying to EU settlement scheme is the 30th of June 2021, so thanks for that. Yeah, so gosh, where to start? I mean, small businesses, should they be plugging into your Brexit hub? Would it have all the information there?
Yeah, I mean, there, as we've said, there are plenty around. I mean, I'm sure I haven't actually looked at Nick's firm's one, but I like the idea that it actually had its own link with trade deals there. Right. And our one covers more than just trade. I mean, that would have on it that the thing that Steve mentioned, that it's the end of June next year is the deadline. So it does cover a wide range, but there are so many aspects to this. And I sort of repeat that, yes, you can go to the hub, you can go to this, you can go to that, but ultimately you've got to take ownership of it for yourself, for your firm.
Oh, okay, well, that's loud and clear. So we've heard that. So thank you very much indeed, Peter. And again, we hope that you will come back to see us and update us at some point during the future, and so that our businesses are really well informed about how to prepare for this this period of uncertainty. Really, it's still what we're getting from the speakers, or certainly what I've heard, is still some degree of uncertainty, but you're all professionals and given us very concrete places to go to get the information. And we've heard that we have to prepare, because from the 1st of January, there will be mandatory changes and businesses need to be following those rules. And we hope that government does its bit as well, as you were saying about the lack of people on the ground, professionals on the ground that we need, customs. So let's hope that it all comes together in perfect harmony. But if we don't have any more questions, we'll leave it there. I'm just going to check the Q&A, see if there are any more. Oh, we do. Are there special considerations companies need to bear in mind when trading with the Republic of Ireland post-Brexit? So, I mean, is that something, Peter, you can answer?
Yeah.
Thank you.
I mean, we do have a special relationship with Ireland overall, and as you know, you don't need your passport and so on to go back and forward there. From a trade point of view, of course, they are a member of the European Union, and from the 1st of January, our extension period ends, and so we won't. If there is a UK-EU trade deal, then Ireland will play their full part in that. I expect it to be duty-free entry either way. If it's not, then Ireland go on to WTO rules, just like everybody else, and there will be duties to be paid. There will be a divergence in regulations as time goes on, and you will have to check, as one of the speakers said, you know, when you're importing and exporting or trading with anybody, you have to know what you have to comply with in the market that you are selling into. At the moment, we know because we're in the EU. Afterwards, we won't. So that's the answer.
Thank you very much, Peter. Well, thank you, Peter, very much indeed again for supporting this seminar. We're extremely grateful, and to Greg, Nick, and to the council, Councillor Baker, and the economic development team for supporting this. So Steve and Susan, thank you all very much for attending. If you do have any questions, please get in touch. And remember, as we've communicated with you all, there are follow-up sessions if there are any specific areas where you need further clarification, having listened to all of this. But remember to read those however long those tomes that you've been directed to, and make sure you take the reins of your own business and navigate through Brexit. But thank you all for attending, and look out for our next sessions and keep in touch. And thanks very much. Thank you.